Everyone else is joined. Bear with me if I'm speaking because when I'm speaking because I'm recovering from this throat infection that I've got. So cool, let's get started. So first of all, this is the DXY. We've been forecasting this for a while. A drop to If we zoom out to the daily time frame, we can see that we were expecting a 1, 2, and the third tap, right? But it looks like price is potentially going to reverse. So this is a very key lesson as to why you shouldn't have a perfectionist mindset and think in terms of probabilities. So first of all, we did forecast that price could do two things. Take out these lows, this double bottom, 1, 2, liquidity here on the left on a smaller time frame, and a potential reversal to the upside, which was plan A. Plan B was obviously the liquidity level here, also in confluence with 1, 2, and 3. So that was plan A and plan B. Now, if you were just sticking to the first, the Hollywood trade, which is the high probability trade, which is the third tap, you would have missed out on a potential entry. So this is why it's very important to forecast multiple scenarios and not really get fixated on just the high probability Hollywood entry if you're going to miss entries before that. So I had plan A and plan B, and it looks like plan A is actually active and it might not retest the trend line. We don't know that yet for now. So if we zoom into the 4-hour time frame, we can see a few things. So, okay, there's momentum to the upside. Now, am I expecting price to continue up? Potentially. If we zoom into the 1-hour time frame, we can see that price is actually, there's a bit of momentum, little bit of momentum here. Because remember, if you want price to reject from this level, you need a few things. You need price to come to your trend line very correctively. Let's say that's a trend line bounce, and then you can get a tap reversal to the downside. Although we do see some momentum here, right? On the way up, it's very corrective. There's one momentum candle here, a second momentum candle here, and candle here. So just bear that in mind. Let me just repeat what I said one more time. So first of all, this piece of information is telling us a few things. There's momentum here, and momentum here. Maybe this is momentum. However, everything else is very correctively, as you can see. And all of this piece of information is very bearish. So right now it's a bit of it's not really a high probability that it's going to reverse from here, because on the way up, there's a lot of compression. So would I judge this momentum to the upside just because of the current candlesticks? No, because all this piece of information, this corrective structure here, is going to outweigh the current momentum candlesticks right now. So right now on Euro USD, I'm expecting a reversal to the downside, right? I'm actually expecting, if we do in our technicals, it's a bit of a pattern playing out, right? And there's also some liquidity approximately here. So I'm expecting a reversal to the downside for a few reasons. So number one is simply because this large pattern is really just an extension of this large momentum. So we've got momentum, then we've got a large correction, as you can see. So the reason I'm expecting a reversal, simply because one, it's not really impulsively rallying towards my trend line, which obviously 1, 2, and 3. It's also a large bearish candlestick pattern that's currently on the cards. Now, another thing to take on board is the fact that liquidity hasn't been filled yet. It missed it by a few inches, a few pips. So why now this is going to be a magnet? If we look to the left, there is some liquidity on the smaller time frames, and here again on, let me just take this away. And here again on the smaller time frames. You won't see it here on the 1 hour. It's normally on the 15 minute and the 5 minute. So I'm expecting a reversal from this side. Right now, I believe this is a trap and it's tricking traders on the wrong side. So either a reversal from here or a small stop hunt and then a drop to this level down here, simply because there's also some nice liquidity approximately around there. We'll have to go on the 15 minute. There we go, on the 15 minute, nice momentum to the downside, failed to retest. So this is a possibility for price to depreciate. So I'm expecting a reversal from here. However, if I am wrong, it's fine, because I'll look for a buy setup. You know, if it completely rallies, then okay, I'll just catch the correction, small compression or maybe some equal lows, catch the stop hunt, and then I can get involved on the long. And obviously the long right now on Euro USD is, DXY is looking very, very promising towards this outer structure. So there's a big long on the cards, whether it's here or whether it's from the point of interest, which is down here somewhere. So on the DXY, I'm expecting one more drop, but I'm also prepared that if it doesn't drop, it will likely rally and I'll catch the retest. But there's more confluences for a drop, simply because there's a big bearish flag. It's a bit correctively on the retest of the trend line. Also, you can dash in a Fibonacci from this large move up here. And you can see A, B, C, and confluence with the 79, etc. So it's still looking a bit bearish, but it does look very tempting to get involved on dollar longs now. But based on market structure, for me, it's still a little bit bearish, and it still hasn't completed the third tap. So moving forward, if we look at Euro USD now, you know, okay, it's moved from this level. This was a very specific level that I forecasted way in advance. Now, did I take this? No. Even though, yes, I knew there was a high chance of it reversing, simply because, yes, there's liquidity here, clearly, and there's a third tap. Now, you know, I could have simply, you know, entered this trade here, have a nice juicy stop, you know, 11 pips or whatever, you know, I'll be up. Now, this is when discipline comes in. Even though this particular entry came, I still never took it because I'm very disciplined with my schematics, which is I tend to wait for, once the level gets triggered, I wait for the retest, I wait for some equal highs, then I catch this level here, this unfilled liquidity, and then this is my entry. I'll either wait for this entry or I'll wait for, let's say you see some equal highs, I'll wait for a stop hunt, then I wait for a second stop hunt of another level there. So I'm always sticking to the same schematic, and this just saves a lot of stress. It removes all the FOMO, fear, greed, patience, discipline, everything, because I stick to one schematic. I've missed it. Do I feel anything? No, because I still believe there's a chance of it coming to my entry level, which is up here, you know. But at the same time, just because I've got a potential entry there doesn't mean I'm going to set an order there. I still need to see what would happen on the way up. What price action will happen on the way up? Because if it starts forming something like this now, there's a bit of a flag happening. If it breaks up to the upside, then obviously there's a chance of it just completely rallying and tapping this and tapping this level here. Two levels here on two levels here on two levels here on the smaller time frame. So this is why I'm very patient. I'm still waiting for, I need the charts to really scream at me and say, look, Diego, this is it, set your order. Right now, I believe this is a trap. So I'm still waiting for my entry. Again, the same with the DXY. If it completely melts from here, then fine, I'll just wait for a retest, wait for my schematic and get involved. But didn't want to get in here because I don't like catching, I don't like catching knives. This to me is pretty impulsively, so I don't like catching knives. I prefer actually catching butter knives. They're just a lot safer, It leaves less of a scar. So if we go to the 4-hour time frame, you actually go to the daily, we can see that the long-term picture, I am expecting a strong decline towards this level here, further south towards this level here, and obviously the main target, which is here. So there's a lot of room to the downside, but I'm still not convinced on taking a sell position on Euro USD. So I'm more interested in a sell setup here, but again, I want to see correction or some equal highs, respect this level, then I can get involved, But again, I need to see more information, If it starts forming a pattern, then I'm most likely to get in. And there's so much that you need to do to really master one entry and have one schematic and one variable. But right now I'm remaining patient. It's broken the trend line. Does it mean it's gonna completely melt? No, because what's market psychology telling us? That there's a high chance that many traders will actually take a sell here, but really what tends to happen is it breaks and it goes back inside. However, there is momentum. The candle was very impulsively, so there is a chance of it to drop. So, there's nothing I can do until the market is telling me enter it, then I enter it. For now, there's no setup unless we get a pullback correctively and with a pattern. So that's it for Euro USD. Is okay, dollar yen. Okay, dollar yen was another trade that we forecasted an entry up here, which was obviously in confluence with some unfilled liquidity on the smaller time frames, a 1, 2, and the third tap here. Now, okay, again, same scenario. I could have entered it here. I could have had the sniper of death, as they call it, and have a nice, fantastic trade, But based on my experience, what tends to happen is I get stopped out a lot. And my preferable higher probability trades is when the bank level gets triggered, break structure on the smaller time frames, as you can see here. Then it does a retest, and then it goes long. Once it goes long, it leaves this gap here, this unfilled liquidity. This is where I like to get involved. This is my kill zone. It never came. Okay, fine. Am I bothered? No. Because when I catch these trades in particular, I tend to fantastic RR trades. And they tend to be really decent, And look, to take profit, 15 hours. This is why I'm very patient with my entries. I'm very, very patient. I don't really, even though I can forecast pinpoint accuracy reversals, I still don't take them because I've learned in the past that when I do, I get burnt and the risk reward ain't as good if, other than when I wait for the kill zone. So that's it for dollar yen. It broke from this. It's now reacted from this level, which would have been my take profit. And now, I need to remain patient. Do I want to get involved in a trade somewhere here? Not necessarily, I still believe there's a chance for it to come to my kill zone, which will take maybe a week or so. So for dollar yen, nothing really on the cards until we break to the downside. I'll be looking at price action approximately around here, and we'll see what happens. We'll see what happens, because when you think about it, at the moment there's a bit of a left shoulder. See this left shoulder? There's a bit of a head, and there's a small right shoulder here. The right shoulder traders normally get stopped out. It gets stopped out on the entry that I want to get involved in. This inverse head and shoulder, you need to trade the market psychology. So if you're going to enter a trade, enter it where people be around stops, which would be around here. So for dollar yen, that's it. There's not much to go on. You know, the targets on dollar yen is up here. If we look to the right, there's some liquidity here just above this high. So there's a nice long position on dollar yen pending. But again, it's looking pretty decent. If I'm expecting DXY to drop one more time, this could be the opportunity to drop one more time to get an entry on dollar yen. So for now, just have to remain patient really. Again, also a pattern that I go over and over again, and it just keeps on working over and over again, which is the equal lows, right? Then compression below the equal lows, and then a rally to take out this previous high, which is what happened here. We've got the equal lows, then we've got the compression below the equal lows, and then a rally, and it's most likely going to take out this high here. Just a schematic that just works over and over again. So for now, there's no trades for me on dollar yen. Okay, next on the list is euro pound. Okay, my throat's starting to hurt a bit. Okay, well, let me take this away. Okay, so euro pound, beautiful equal lows, nice compression to the downside, one tap, two tap, and the famous third tap. Okay, perfect. So big possibility that price is likely to come down here. So this is most likely my next trade on euro pound. Also, what I like about it is, you know, there's a fake out of the trend line. So again, I don't make this up. This is a pattern that happens over and over again. One tap, two tap, third tap, trick traders on the wrong side, fake out, and it close back inside the actual trend line towards at least this level here. 1, 2, and obviously 3. We look to the left and some unfilled liquidity. So I'm just repeating the pattern over and over again, over and over again. That way, you know, I won't fall into the traps of over trading, FOMO, discipline, patience, all those other traps that traders fall into, or confidence, etc., simply because I'm just trading the same schematic over and over again. So this is a pretty nice level of interest on euro pound. And euro pound is also one of my favorite setups. So that's pretty interesting for a potential rally to the upside. By then I'll have to update the trend line, but for now I'm going to leave it here and just separate the patterns. You know, it helps with psychology, and the most relevant piece of price action is currently these patterns here. So that's it for euro pound, just keeping it very simple. Okay, next on the list is Kiwi CAD. So this is the only trade I've taken profit on. So if I walk you through, we go to the daily. Again, equal highs. Equal highs 1, 2, 3, 1, 2. Stop hunt above the equal highs, as you can see, with some unfilled liquidity on the smaller time frame. So I don't make this up, it happens again, over and over again. So when I saw that, I think we did actually catch this a couple of weeks ago on the mastermind. We actually did. We caught a decent trader at 10.50 now. So again, pattern happens over and over again. This trend line now got broken to the downside. This is the importance of pattern separation. Now, it broken to the downside. Most traders now would have probably taken this short on the retest, stop loss above here. They've been stopped out, right? Market psychology, always anticipate where retail will get stopped out. Whereas if you separate the pattern and then you focus on what's actually happening, there's a schematic happening here, right? There's equal highs here, there's liquidity here, there's momentum, and then you've got the correction. So I'm still trading the same schematic, but I've separated this piece of information with this trend line. Hence why I managed to catch a trade up here. And not get tricked that, okay, let me just clean this up. And not get tricked that, okay, if there was a break in retest and it's closed back inside, it's now completely, the pattern isn't validated, etc. No, you separate the pattern and you focus on the schematics that's relevant. So if we zoom into the 4 hour, again, my target on Kiwi CAD is here as take profit 1 and take profit 2. We zoom into the 4 hour. Again, I'm trading the same schematic over and over again. Equal highs, liquidity. This was an entry here. I think we did capitalize on this one. Then there's a stop on of this. Remember the schematic? You've got the equal highs, you've got a stop hunt, and then a second stop hunt. This is a high probability trade right there. So let me just, there we go. So we caught this trade. There was lots of news. It was a bit of a wide stop, simply because there was liquidity here as plan B, and also I never saw the correct information to have a tight stop there. So I had a wide stop on this occasion. So originally my take profit, as my take profit 1 was a 6.4R, but I closed it here simply because this was telling me to close it, I saw compression on the smaller time frames. As you can see, I saw this pattern, and normally what you get when you do have this pattern here, is that it tends to, most of the time, complete a third tap, which is 1, 2, and 3, especially after compression and especially after 4 hour bullish engulfing. Happens over time, quite a lot of the times. On this occasion it didn't, but do I want to stay in a trade knowing there's a high chance that it's going to come all the way back up to my entry, come back up to my entry or my break even? This is where I wanted to enter as my second entry here, but don't want to hold a trade knowing it's likely to come up here. No, I'm going to bank some profit. So I decided to bank after this bullish engulfing, approximately there, so it's 2.69R. And then what happened next is, okay, started messing around, climbed a bit of a stop hunt, and okay, we started dropping. Do I care? No, I stuck to my rules. It continued to go lower, but I'm not fussed. I'm happy that I came out because there was a reason for me to come out. Because in the past, I've been burnt many times trying to be very, stubborn and fixated on one particular take profit. Yes, I need to hold it. I need to hold it here. I need to hold it here. But if the market's telling me to come out, I'll come out. And I came out. And what's happened next? Okay, it's continued to drop. There's momentum. So now it's most likely going to take out these equal lows and go to my original take profit. But which is fine. I'm happy with the win. Still a good win. So this now I can delete. This for now, don't really need it. So now I'm updating my charts. Don't need this for now. There you have it. So, okay, Kiwi CAD is done. Is there any trades? No, I'm not interested in a trade unless we get a strong correction. But for now, the characteristics with Kiwi CAD is there's a trade literally once a month. So I caught this, what did I catch? I believe I caught this trade here last month after these equal highs. I caught, was it this trade here, and this trade here, and then this trade up here somewhere. This, somewhere up here I caught a trade. Like the trade comes, Kiwi CAD comes once a month. There's a high probability setup, but it's worth the wait. Other trades like Euro USD, etc. There's a trade probably once every 2 weeks or once every week. But Kiwi CAD, you just need to be patient. Every currency pair has its own characteristics and timelines of the setups that come. Okay, I can feel my voice going more. Okay, so next on the list is cable. Okay, cable's another one. We've got the equal highs. We've got the stop on of the equal highs. Do I want to catch this trade? No, because there's normally going to be a retest. If we zoom into this time frame here, okay, you know, been triggered in on this liquidity here on the smaller time frames, but there's no schematic for me to enter. You know, I need to enter at some equal highs. So we did forecast a reversal on the mastermind approximately here. So well done to those who took it. But if you know me, I prefer to wait for more of a confirmation. So, okay, rejection, a drop, break out the lows. And then on the pullback, if there's some form of an equal high, this trade here. It never came, but which is fine. I'm really not bothered. So that's it for cable. Where is cable going? If we zoom out onto the 4 hour, there's a bit of a large pattern in place. So this pattern here, this expanding pattern with the equal lows has now formed a pattern within a pattern. So I've separated the pattern. I've separated it, and then I focus on this current pattern. Next week, sometime, you know, I might have to separate this pattern and there'll be a new pattern here. You know, so it's very important to separate the patterns. So that's it for cable. I'm expecting downside towards these equal lows and this level of liquidity. On the bigger time frame, really on cable, we're looking at these lows to get taken out. Simply because we have the equal highs, large correction, and what happens after the correction? A big downtrend to take out these lows here. But that's a long-term position. I'm never going to hold a trade that long. But this is where it's likely to go to next. Okay, so that's it for cable. In terms of an entry, I just need more. I need more data. You know, if I see some equal highs approximately here, then I could take it. But for now, remember that pattern where I said equal lows or equal highs? Then there's a stop hunt of the equal highs, which is the equal highs, the stop hunt, just like here we had. Then the second stop hunt is where there's a high probability trade. So this is the schematic I'll be looking to take. So I'll rather take a trade up here somewhere. Unless there's a schematic before that and I see a good setup, then I can take it here. But for now, there's not really any more trades unless we continue to drop. And if we do drop with momentum, then I can catch the retest and look for one of my schematics on the retest. So I'm still waiting on cable. I'm sure there's a decent opportunity coming up soon. So that's it for today, guys. Hopefully you guys enjoyed today's live stream. Is there any pairs that you guys would like me to cover before I wrap things up? US 30, okay, Wall Street. That used to actually be my number one market when I first started trading. I used to be a fantastic scalper in US 30 and Germany 30. I have not analyzed this in a long time. Okay. This one will do. No, this is a stock. Here we got this one, US 30 USD. Okay, boom. Okay, US 30 is so parabolic. This is how crypto we got in crypto here. Crypto is just gonna continue going up. Okay, so what can we see with US 30? from what I can see is, okay, this high has been taken out. There's actually been a break and retest. However, there is quite a lot of compression. If we go to the daily, okay, so there's compression here, but then it formed a side move. So what I'll be expecting is, if we go to the 4-hour now, see, originally I would have said, okay, there's a drop coming on US 30. As you can see, drop came, but now everything's changed, and the most relevant pattern is a bit of a triangle. So I can expect a rally to the upside. You can dash in a fib since it's new highs. So already tapped to 61. I'll be expecting a rally towards the 27, which is 3-4-500. In terms of an entry, going to the 1-hour time frame. Let's tidy this up. Okay, there's a bit of a pattern here. Go to the 15-minute. So a nice reversal from approximately this level here would be ideal, especially complete this trend line here. I'll leave it here for now, because since there's no pattern confirming it. So a buy position, it will be 1, 2 and 3, and again I'll be looking for my schematics. So let's say it does this, a rejection, and then a stop hunt, then I'll be most likely getting involved in this trade if I was taking this currency pair all the way up to the fib extension that we had mapped out. Yeah, so yeah, up to here, wherever the fib extension was at 3-4-500. Yeah, so this is what I see on US 30. So now there's a potential buy setup, and if I'm wrong, then it's fine, I'll just catch the break and retest. And I'll look for the same schematic to the downside, towards minimum this level here, to take out these lows. So again, I'll be looking at this, and I'll be looking at 1, 2, 3 on this pattern towards 3-4-500, where the fib extension is at. So I've got plan A and plan B, whichever comes first, I'll be taking it. So that's it on US 30. Okay guys, I'm gonna wrap things up. I think my throat needs a break. So I'll see you guys next week. Okay, take care everyone. Bye bye.